Good afternoon, everybody. Great to see so many people joining our Venture Trends update for the emerging venture market space. My name is Bahoshy, founder and CEO of MAGNiTT, and as I do every quarter, today is an opportunity for me to share some of the insights and trends that are developing from the emerging venture capital ecosystem, predominantly the ones that we cover, the Middle East, Africa, and Southeast Asia. For those interested, you can download a free version of the report, which is basically what this is built off, and someone in the team will be sharing the link for that. The structure of today's session is, as I always do it, maybe a 20 to 30-minute presentation on key insights, and then I'm very happy to answer any questions that people may have. Please feel free to share them either in the chat box or into the quick Q&A, and I will address them at the end, as and where I can. So to kickstart the year, as we say, MAGNiTT is filling the VC data gap. And one of the first things I want to kind of highlight as part of this presentation, and for your regular people that have attended, this will be the first time where we will actually be benchmarking Southeast Asia data. So while my focus in the presentation will be on MENA, MAGNiTT now has incorporated Southeast Asia, predominantly Singapore, Indonesia, Philippines, Vietnam, and other countries, and it gives another perspective to the data and the state of the ecosystem as part of this presentation. Before we jump in, I always like to give a little bit of a macro overview. So kind of four key areas which I'd like to highlight for what was an extremely turbulent year, in my opinion, at a macroeconomic level, starting with the stock market. In terms of the overall market, up until about mid-November, you would have said that it was a pretty flat, turbulent year for the stock market, driven by the big seven that people talk about, the big stocks in the tech space that were seeing extremely high performance off the back of the AI integration or the AI story that was developing across the whole of 2023. And then at the real tail end of the year, you saw a surge, as you can see on this chart, where in the end, you saw this 44% increase in the NASDAQ and a 25% in the S&P, which are extremely positive and strong figures for the public markets. But I think that's very much a story of two halves, where you saw at the beginning of the year, somewhat more turbulent, especially going into Q3, and then a pickup of activity in the public markets to year end. And I think that's extremely important because you can use the public markets as somewhat of an indicator as to what's happening in the private markets. In many of the presentations that I gave over last year and in all the conversations that I've been having, I think that interest rates is an extremely important metric to be looking at. I've said in many ways that interest rates are the devil of venture capital. And to basically exemplify that, it's the crowding out effect. If interest rates, as they are now at 5.5%, with all indications that they're going to be staying higher for longer, despite the fact that it's been mentioned that there are likely to be up to 3 cuts next year, then the opportunity cost of the asset class of venture capital is much higher than it would be in the 0% interest rates that we've been used to over the last couple of years. And really that impact has been driving what you see in terms of the overall performance of venture capital. This chart I did in the Q3 report, and I've updated it to year end, highlighting interest rates against the S&P and the public, the global venture capital investment. And you'll see here that interest rates, as I mentioned, staying higher for longer, similar to what they were in 2007, 2008. Public markets, this one in particular being the S&P, rallying back up to the highs that were seen in the tail end of 2021. And yet global venture capital funding is down to the level that are similar to 2020. In fact, when you look at other platform data, you're seeing, and I'll show you that in a second, a real decline in venture capital investment activity compared to previous years. So as long as we are in a high interest rate environment, is my point, we expect there to continue to be volatility in the venture capital deployment of capital across the global markets as well as in the regional markets. This is an important metric to keep highlighting. Startup shutdowns and layoffs. For the first 11 months of 2023, saw a substantial increase in the number of shutdowns. In fact, we took Carter, who are doing a tremendous amount of transparent data sharing on the state of venture capital using their proprietary data. And you see that they had the highest level of startup shutdowns in 2023. Now, with the interest rate squeeze, you're seeing less venture capital being deployed, harder to raise funds. The growth at all cost model becomes a lot more questionable. The need for unit economics extremely high. And as a result of that, last year you saw that many startups that were unable to weather the difficult economic markets that I've just highlighted have needed to shut down. At the tail end of last year, there seemed to be an element of optimism. People started talking about how things are beginning to turn the tide. And yet, in the first 10 days of this year, we've seen a wave of information that's being shared. Here's just a tweet that I found. Several large corporates, we've heard the likes of Google, Citi, and etc., as well as many of the leading tech companies in the US that have announced layoffs, which means that those challenges that were being faced at the tail end of last year have now trickled into, or at least are cleaning the books as we enter 2024 in the unfortunate layoff of many people across that organizations. And as a result, have we really got ourselves out of the headwinds of 2023? And finally, one of the key metrics that we keep looking at a global level is the IPO market. And what you see here is that the actual IPO levels going into 2023 have been somewhat subdued. In fact, they're lower than they have been for previous years, both in terms of the number of transactions and the total amount of capital that was being deployed. And that's something that we want to continue to track in terms of performance and success, because here in the region, we haven't quite seen as many IPOs, but it's an indication of the IPO activity that's happening globally that can reflect what we see here as the mega deal activity for the MENA region. Coming a little bit closer to home, specifically into the MENA region, what are the key kind of dynamics that we're seeing? Well, oil prices. A lot has been spoken about the surge in oil price to kind of almost high numbers that we've not seen for previous years, to 97 barrels a dollar at the tail end of September. Now, geopolitics aside, that volatility has definitely created a little bit of challenge at a regional level and at a global level. That came off considerably going into December, but still we saw a slight rise again in oil prices. And one of the key reasons that you hear oil prices being a challenge, and this was brought up in the All In podcast only last week, is that if geopolitical frictions can happen here in the region and continue to drive oil prices up, that puts a big pressure on inflation. And if inflation continues to grow, then it causes the Fed in the US, at least, to have to maintain interest rates at higher levels, which in turn then impacts the public markets as well as the private markets, as I highlighted on the slides before. So the fluctuation of oil prices is definitely a deterrent, especially in terms of inflation. Now, on the flip side of that, and we'll come on to discuss how the GCC geographies have weathered the storm better than potentially other geographies, both globally and locally, it means that sovereign entities that are funding the venture capital space, whether it's directly through investment or through their fund-of-fund programs, are able to build out their coffers for that type of deployment. Secondly, we have seen, at least in KSA and the UAE, a slight softening of the inflationary pressure. In both cases, inflation being curtailed in the region, at least from the data that's being shared both by the Saudi General Authority of Statistics and the IMF for the UAE. That is definitely going to be positive going into 2024 if that continues, albeit in the UAE case, it's still a positive inflation figure, which means that costs are likely to continue to become more of a challenge. This was also highlighted last week in one of the podcasts I was listening to. While the rate of inflation may be declining, inflation still is positive, even if it's at 3 or 4%. And therefore, we're expecting that prices are going to continue to rise. More cautious of the fact that the floor of what pricing is numbers that we're seeing at the moment. So where people are saying things are becoming expensive, salary inflation is being adjusted to accommodate for that, we're now seeing a floor in what the inflationary pressure is causing to the wider ecosystem. And then finally, we have seen in the region a flurry of events that have been driving the venture capital space. And I'll come on to how that kind of impacts venture capital data in more details. GITEX have taken place here in the UAE. We had FII, COP28, Milken, even Web Summit took place in Qatar. And there have been initiatives at a government level, specifically the one in Saudi Arabia, where you saw the initiative to drive regional headquarter to Saudi Arabia for the region. Almost 180 multinationals, beating the target of the 160, ended up being relocated into Saudi Arabia as the kingdom continues to create incentives for companies to set up and acquire talent in the kingdom. And headlines across the board in international press have highlighted a lot of the activity that's been happening specifically in the GCC, if not more specifically within the UAE and Saudi Arabia. So I think that's always very important to provide the macroeconomic context of what is happening in our space and the actual reason for this webinar. So what has happened in terms of the venture capital initiatives in 2023? Well, across the board, again, starting with the UAE and Saudi Arabia, a lot of initiatives have been driven at a government level, as well as in the private space in terms of events and different type of regulators stimulating the economy to drive venture capital. So while we are seeing effectively a slowdown in venture capital in terms of investment, both the UAE and Saudi Arabia have continued to drive policy and initiatives to attract capital, startups, and the growth of the ecosystem. Here are just a few of the examples that we've highlighted that are available in our paid reports, but you can see that they're effectively trying to drive setup of companies, attract international investors. Here you see the example of Golden Gate Ventures that are now a Southeast Asian VC group that I actually met on my visit to Singapore last year, that have now set up a regional headquarter similar to Antler, that have raised their funds, and we have a slide highlighting the new funds that are created for the region. So it is both to attract the startups as well as the VCs for further deployment, as well as initiatives to try and drive the cost of operations. And this is not only in the GCC, or at least the UAE and Saudi Arabia. There are similar initiatives that are being driven across the whole of the MENA region to try and stimulate and drive the investment capital that's going to be deployed into venture capital into the regions. So here are just a few of the examples. So before jumping into the MENA region specifically, how did the emerging venture markets, the term we coin at MAGNiTT to capture everything outside of the US, Europe, and LATAM, compare to global markets? And I think it's very important. One of the things that I say to the different government ministers, our clients, is that you need to be able to contextualize what's happening here in line with what's happening globally. And to start off with, here are some of the data that was provided by, in this particular case, CB Insights, although very similar to what's reported by PitchBook and Crunchbase in terms of the global and emerging venture market space. The high-level numbers, to be clear, are ours: $11.9 billion of investment, which now includes the geographies of Southeast Asia, the Africa continent, as well as the Middle East, Pakistan, and Turkey. So a 51% decline in terms of capital and a 37% drop in deals. And then when we compare that to some of the more mature markets, you can see that the USA saw a 36% drop in investment capital, 23% drop in deals, and et cetera, et cetera. So you can see that across the globe, there has been a slowdown, both in capital deployment, as well as the total number of transactions that were deployed into venture capital entities and startups across the globe. But when we double click into our regions, it's very interesting to see some of the changes. We're seeing the total amount of capital that was deployed into the Southeast Asian geographies that we currently cover. 60% drop, greater than the average across the whole of the emerging venture market space, and a 46% drop in terms of deal flow. Interesting to note, though, and you'll see this as a recurring theme, the mega deal attributions, those that are investment deals of greater than $100 million in capital, was close to 50% of all of the capital that was being deployed into Southeast Asian countries. How does that compare to other geographies? Well, here you'll see that the MENA region actually only saw a drop of 23% in terms of investment capital versus the 50% that I just mentioned, and a 34% drop in terms of the total number of transactions, with only 43% coming from the mega deal attributions. But when you go into Africa, you see, again, a similar drop in terms of invested capital, 42%, 43% in terms of transactions, but only 22% of that is coming from those mega deal transactions. So a larger proportion of the drop came from investment deals, of deals smaller than 100 million. So the underlying ecosystem was somewhat less impacted than the mega deal contribution for the continent. And so that kind of paints the picture. Number one, everywhere across the globe has seen a slowdown in investment activity. And here we actually put them into context. Globally, a 42% drop in terms of funding and 30% in deals. And here you can see how each of the geographies ranked, with the MENA region being a slower decline in invested capital, versus the global average, in fact, lower than the drop that was seen in the US, Europe, and LATAM. Before I dive into what our key takeaways from the report were, I'm going to highlight some of them in terms of summaries. Regional VCs continue to be in line with global trends. I've kind of highlighted that. But how did that pan out over the year? Investors have looked to try and focus on early stage, and I'll explain why. Turkey leads the way in terms of investment deals in the emerging venture markets, while Singapore came first in terms of funding. Fintech remains the industry of choice, something I've now probably repeated in the last 6 to 7 webinars that I've now done. Investor appetite has slowed in the MENA region. And finally, valuations have led to M&A activity being somewhat harder to come by in the last 6 months. So starting with what was happening over the last 12 months in 2023. Again, just to give you a little bit of an overview, the markets that we cover here are Southeast Asia, Middle East, Africa, Turkey, and Pakistan. You can see that in line with global figures, there was a slowdown. But when you go into the quarter-on-quarter evolution, it was an interesting story. As you can see here, the peak of investment activity can almost be highlighted as Q1 of 2022, that saw somewhat similar investment in Q2 of 2022, and then a progressive decline. What we did see was a pickup in Q4, an increase in both investment capital and deal flow. How does that compare to global markets? Again, the figures from CB Insights, and you'll see that Q4 saw a decline in capital being deployed and a continual decline, almost a flatline decline in transaction numbers dating back to Q1 2022. One thing that I find particularly fascinating is that I always like to look at the global markets as an indicator of what might potentially be happening in the emerging market. It is known, and there tends to be somewhat of a lag in data reporting, transaction reporting, the global impacts. The impact of the Fed, for instance, the US, is a much more immediate impact into the public market, private markets, and the startup ecosystem. Here, because there's a follow-on effect of what's happening at a local level in line with what's happening in the US, it tends to get lagged. One thing that I've highlighted to the team, and it's actually one of the predictions that I'll come on to speak to, I think that we're in for a period of range-bound investment, i.e. 1 quarter higher, 1 quarter lower, 1 quarter higher, 1 quarter lower for the next progressive 4 quarters, in line with what's happening globally. Similar to what was happening in 2019 and 2020, but the acceleration post-COVID kind of deployment of capital when interest rates in the chart that I showed you went back down to zero. That escalation is likely to only happen when interest rates begin to get cut. So while many people are talking and are looking to the Fed and Jerome Powell's changes to the Fed rate, again, you'll put into context the points that I made about the macroeconomics. If interest rates remain high, if oil prices go up, if geopolitical risks lead to challenges into the wider economy, those interest rates are likely to stay higher for longer, and those 3 rate cuts that were predicted may or may not happen, and therefore we will unlikely see a pickup in investment activity until that begins to become the case. What we did see at the tail end of last year was a pickup in the mega round investments, and specifically in MENA, we saw 2 or 3 that were happening, and I'll come on to that in a little bit more detail. I talked about the IPO numbers that were happening at a global level. One of the things that we look at here is the mega deals as a kind of indicator towards IPOs. Ultimately, companies that are well-funded, big in size, cross geography, and ready to get listed are the ones that are the most capitalized. And therefore, these mega deals can be an indicator towards which are the most likely to list and get to IPOs. So here we did see a slight pickup in mega deal activity going into year end. But when you strip out that investment activity of mega deals, you can see that, again, the trend is very similar to what's happening at a global level. How does that translate to, again, the markets that we're covering in particular? Starting off with Southeast Asia, very similar trend to what we saw at a global level. Slowdown in investment capital, volatile up and down investment activity over the full 4 quarters that we saw. And that is very much in line with a more mature market that we see in the US and Europe. Interestingly, MENA has been a little bit challenging to kind of identify. If you look at the numbers and take it at face value, Q4 saw a record amount of investment capital in one quarter compared to any previous quarter. Many would indicate that to be a recovery. I consider that to be somewhat flawed. And the reason for that is we saw the lowest two quarters in Q2 and Q3 that we've seen dating back to 2021. Now, understanding the mindset of the Middle East, we know that number one, it's a summer period, which has historically always been, where you see here, Q3, the lowest quarter in the year. Ramadan and Eid and the two Eids took place in Q2, which also impacted the investment activity that was happening here in the region. And 50% or almost 50% of the record amount that was seen in Q4 were mega deals that were announced in the last 2 months of the year, which did not take place in Q2 and Q3. So if you average out those 3 quarters, it becomes a little bit more of that story that I was talking about, 1 quarter high, 1 quarter low, 1 quarter high, which is why I predict that this will be the pattern that we see going into 2024. But why did we see all this mega deal activity? I'll come on to explain that in a second when we talk about some of the specific geographies. But you talk about Tabi's investment, you talk about Tamara's investment, those mega deal investments really skewed the data at end of year. And finally, Africa, again, the 2 points that I mentioned, other emerging markets saw similar patterns to the global trend. The only one that bucked that trend was the MENA region, which saw this record quarter. Africa, again, Q1 2022, record amount of capital and number of transactions, progressive declines, very much in line with the global trends that we've seen. And so when you bring that all together, you can see that the MENA region has effectively bucked global trends at the end of the year. Southeast Asia did see positive investment and deals, but that the trends are interesting to correlate, as MAGNiTT can use on the platform and our advanced analytics tools to kind of see how historical data could drive future behavior in the region. Going into particular segments. So one of the things that was very interesting to note was the disparity between late stage investment and early stage. That's the team chart together. And here you see the concentration of capital in the largest 5 deals across emerging venture markets, MENA, Africa, and Southeast Asia in 2023 compared to 2022. So when you take the aggregate of all of the geographies that we cover, it is relatively flat. The largest transaction for about 13 to 30 investment capital. Somewhat limited. It's as bad, and the underlying ecosystem takes about 85%. When you look at the MENA region, you can see that close to 43% of the total amount of capital and the skew that we saw at the end of the year is attributed to just 5 deals. Again, compare it to Southeast Asia and Africa, 33% in Africa and 17% in Southeast Asia, very much in line with the rest of the emerging venture market. So you can see that one of the reasons for the MENA's results in terms of year-on-year performance at minus 23% investment capital can be attributed to a few deals taking a large percentage, unlike global or regional markets. What we did see was a shift of investment behavior. When you take out those mega deal investments, you see that investor appetite has very much been driven towards early stage. Now, again, anecdotally speaking to investors, when interest rates are high, when valuations are coming down, when the cost of capital is extremely difficult, where VCs are having to raise funds from LPs to increase their dry powder, the obvious approach is to shift towards smaller ticket sizes. In this particular case, the one that I'm highlighting is 0 to 1 million, which can be categorized as kind of pre-seed or seed investment rounds. In fact, yesterday, Jason Calacanis has tweeted that the pre-seed investment round is the new seed, which used to be the most popular only 2 to 3 years ago. And the data in emerging venture markets reflects that. In each of the geographies that we are seeing, there has been a significant increase in the investment transactions as a percentage of total number of transactions in less than $1 million. And as investors have a risk-off appetite, that means that they look for a slightly longer term investment deal of about 5 to 6 years before an exit happens, and naturally they shift towards early startups. In the MENA region, exactly that. I've taken a 5-year view of the investment landscape in terms of the capital that's being deployed, in this particular case, of the total number of transactions. And you can see that 42% up 7 percentage points, while the 1 to 5 million category saw a 9 percentage point drop. So basically shifting investments to a much earlier stage compared to previous years. And that has not necessarily been the case since 2021. What that has driven, and again, this is from our advanced analytics tool, a very interesting story. Here you see mean, median investments for valuation, for seed and Series A. So the red line is seed, the black line is Series A, and these are for, on aggregate, the MENA region, the mean and median valuations. Globally, we've seen that valuations at early stage have remained robust, if not increased. That has very much translated here to the region. As investors shifted their attention to early stage deals, as the capital that was available for that space has continued to grow, as we have seen, specifically here in the UAE, more serial entrepreneurs set up companies in the region to operate in the region, the ability for them to attract higher valuations has been strong. In terms of Series A, in the mean valuation, you have seen an increase, whereas median dropped off. Now, there have been some big deals that have taken place, specifically in Saudi Arabia, that have kept valuations somewhat higher at Series A. But when you take out that skew of mean into median, you can see a drop off in valuations, very much in line with what's been happening globally. Again, this is one of the tools that you have on the platform, and you can cut it and use it across industry, by sector, by stage, that can help you understand the market dynamics. In terms of the different geographies, it's interesting to understand what's happening at different countries. So for the first time here, we've ranked the top 10 geographies across Africa, the Middle East, and Southeast Asia. Even adding Southeast Asia as a geography, Turkey still remains the most active geography by the number of transactions. Almost flat, down only 6% in terms of the total number of transactions that were being deployed in Turkey. Again, historically, I've said Turkey is a very vibrant ecosystem for angel investments and early stage investments. Singapore saw a close to 50% drop, a 43% drop, and drop of being the most active, followed by the UAE. So it allows us to see these interesting dynamics, which historically we've only focused on the Middle East and Africa. Now you add a new ecosystem in Southeast Asia to be able to benchmark against. And when you take the top 10 most active geographies, you see 4 of them, even though the most active is Turkey, Singapore, UAE, and Saudi Arabia, 4 of the most active are out of Africa, 3 of the most active are in Southeast Asia, and only 2 of them come from the Middle East. So it's interesting to see how the different geographies compare. In terms of capital deployment, Singapore, which is somewhat more of a mature ecosystem, having had venture capital around for maybe close to 14 or 15 years, compared to the MENA region being about 9 to 10 years, has seen more investment capital, albeit against the 60% drop in investment capital. Similarly, a 70% drop in Indonesia. And the one geography that has definitely bucked the global trend is Saudi Arabia. Saudi Arabia, along with here, South Africa and Thailand, was one of the few big economies that saw a 33% increase in capital deployment, driven in part by the mega deal investments. 77% of the 1.4 billion investment came from mega deal investments, including MAGNiTT, Flowered, Tamara, and Tabi, that relocated its headquarters. But that has really put itself as the leading geography here in the region in terms of investment capital. UAE, for an example, which saw a 45% drop in investment capital, saw no mega deal investments in the UAE, which has been the first time dating back to 2019. And again, when you look at the different geographies, 5 out of the top 10 geographies for venture capital came from Southeast Asia, 2 came from the Middle East, and 2 from Africa. So it gives, for anyone interested in becoming a client of MAGNiTT, or for our clients, it gives a new data set to be able to benchmark and compare against for due diligence purposes and for market dynamic purposes. Here you can see we pulled out some of the specific geographies. KSA is very much the biggest outlier, one of the very few geographies to see year-on-year growth driven by when I talked about the oil prices, again, that was in the context of this, where you have sovereign entities that fuel the fund of funds, whether it's Jeddah fund of funds, whether it's the SVC approach, which in the initiatives that we talked about in our paid report for Saudi Arabia, how they've really stimulated the economy. The results are in the amount of investment capital that you've seen compared to many of the other geographies. And even Egypt, which saw a 30% drop, was very much driven by a single mega deal in Halan. When you strip that out, you see that the true figure is considerably lower. But again, this paints a little bit of an overview of the different geographies. In terms of industries, as I mentioned, fintech remains the most active. Here, we're talking about the aggregated emerging venture markets. I thought it'd be interesting to kind of see how that looks. In fact, when you look at it in terms of any global reporting, fintech still seems to be the industry of choice of global markets. Here, 350 transactions across all the geographies that we measure, and close to $4 billion of capital being deployed. But when you go down into the rankings, you see that there, historically, any emerging market, e-commerce, transport, and logistics seem to be the ones that are getting the most capital, albeit against the backdrop of close to 50% drop in investment capital for these deals. And in terms of investment activity, very similar. Fintech remains in MENA the most active by total number of transactions. This has really been driven, if you take the UAE, initiatives that are taking place in DIFC, ADGM, you go to Saudi Arabia, SAMA, the different regulators, Bahrain with their FinTech Bay. There are many initiatives that are being done to try and drive and disrupt the fintech space that makes it both appealing at a regional level, and when we come on to talk about acquisitions, extremely interesting for international acquirers. And one of the points that I'm going to talk about later, CVCs, banking institutions, whether they be the Emirates MBDs and your local entities, or your global Standard Chartered and HSBCs, who are very interested in this space, makes fintech an appealing industry or sector for founders to be setting up and for the deployment of capital. We also released earlier in 2023 a valuation report, and this is the first example of some of the charts that we're highlighting. The impact of the interest in the fintech space means that compared to many other industries, a much higher median valuation and round size that is being requested for fintech startups, given the interest in the industry and sector compared to many others. This particular case, we're talking about seed investments, and in the next case, a little bit more clustered together. But again, fintech, you can see, along with e-commerce and transport and logistics, outweigh both in terms of median valuation and size, the amount of capital that's being deployed and the valuations that founders are being able to ask for in those particular sectors. In terms of the investment activity, in terms of fund announcements, we did see many different fund announcements. DFDF earmarked some capital for sustainability. We saw SVC making multiple investment rounds into different funds to simulate both the Saudi economy and the wider MENA economy. We saw the announcement of the Orosaya fund here in the UAE, Jeddah fund of fund deploying into different type of entities. So there have been, and you can go on MAGNiTT to get a full exhaustive list of all of the different fund announcements that have been done, not just in the MENA region, but in the emerging venture market space. So there is dry capital that is available. But when you look at the total number of institutions who are actually investing in the markets that we cover, again, in this particular case, the aggregated EVM space, you see that there was close to a 35% drop. That means there were 35% less investors investing in startups that are headquartered in the emerging venture market space compared to the same period in 2022. And the international participation was down about 4 percentage points. Looking at the MENA region, a 30% drop. Again, that's quite a significant drop in the number of institutions. That could be venture capital, private equity, accelerator programs, and etc. But the percentage of international players remained relatively flat, albeit the absolute figure lower than last year. But what becomes more interesting is when you compare the amount of capital that comes from international players. In this year, despite the amount of capital dropping 23%, 20 percentage point drop in the participation of capital from international players. Historically, you see that international players have played at late stage. SoftBank, Sequoia, Tiger Global, NEA, very well-known entities that have played in the late stage plays. What you've seen now is, although I told you that the five biggest deals attributed to almost 45%, so a number of large mega deals have been taking place in the MENA region, the players that are investing in those entities have come from local entities, both corporate venture capital, traditional venture capital, as well as large corporates making direct investment plays. And across the globe, here's an example for the MENA region. You see the investment activity of entities like Flatix Labs and 500, both of which have funds and accelerator programs, and being one of the leading entities in terms of early stage investment opportunities as well as Series A. You go to the amount of capital, you see here the likes of Chimera, STB, Sanabo, Al Jazeera Capital, amongst others. So you are seeing some bigger players deploying larger capital as well as more active players at the early stage. Closing this all out, and I'll come on to Q&A, and please share any questions that you have, and I'll be happy to get to them. M&A activity. When we talked about, one of the predictions that I did last year was that M&A would be that as companies struggle to raise rounds, they would become more open to M&A activity. Valuations, as they come down, would make them a lot more interesting for global players. Well, one thing I didn't take into account was, of course, these are very emotive conversations that take time, capital, and patience to come to fruition. And as a result, there were some M&A activities, but not as many as predicted. Across the whole emerging venture market space, only 45%, there was a 45% drop in the total number of transactions. Anecdotally, though, I expect that to be stronger in 2024, and private equity players become a lot more interested in the space, specifically where we see interest rates likely to drop. Similar pattern here, 38% drop in investment activity for MENA, and MENA accounted for 40% of all of the EVM exits that we saw across the markets that we cover. Before we close out the presentation, a couple of predictions that I have going into 2024. I alluded to the first one already. Again, these predictions in more details can be found in the free report that you can find on our website. This year, I do not expect to see a hockey stick return of investment capital. I expect specifically when you strip out mega deals, and again, I can't speak to what might happen as part of the unicorn programs in Saudi Arabia and some big investments that happen as mega deals. But when you strip out that mega deal investment, I expect there to be effectively 4 very flat quarters of investment activity or the capital deployment in the ecosystem, unlike what we've seen in years gone by. The second, I think that now is the time for corporate venture capital to play a big role. We've seen the likes of Ian Capital being ranked first in the UAE for the first time in terms of capital deployment, ranking 6th, I believe, in terms of total number of transactions in MENA. We've seen the likes of SRNG setting up a ventures arm. We've seen the likes of banks becoming more active. I think that as corporate institutions or family offices that are corporates look to either create venture arms for CVC or direct investments, as we see opportunities develop for M&A investment capital in this space with the need to diversify their portfolios, now is the time to be making those investment bets. And I expect in the report that I mentioned that CVCs are likely to contribute close to 20% of the investment activity in 2024. Number 3, clearly with many of the initiatives that are being driven, the pursuit of the unicorn program, the opportunity for IPO listing, the headquarter program that I mentioned, which is a corporate headquarter program, the examples of Tabi, of companies looking to relocate to the kingdom in pursuit of funding opportunities, as well as the big market opportunity of Saudi Arabia. Let's be clear, there's a reason that they're relocating there. In some cases, it's close to 70 or 80% of revenues generated from the kingdom. I expect that investment capital in Saudi Arabia is to dominate both in terms of the total number of transactions and the total amount of funding. And as we benchmark across other emerging markets, it'll be interesting to see how that closes the gap to countries like Indonesia and Southeast Asia over the coming years. Number 4, I will repeat the prediction. I do think that this year will be a record year of M&A activity, but there's 2 interesting things that are different. Number 1, I think that we'll begin to see 1 or 2 IPOs in the second half of this year, specifically in Saudi Arabia, to support the growth of these companies that are getting mega rounds and for local listings. And number 2, something that MAGNiTT will be focused on in 2024, secondaries. I think secondaries has been an area that's been somewhat neglected. There are many players that are opening their platforms now to support secondary exits of companies. There is a lack of liquidity for VCs, founders, employees, and different investors in the ecosystem. This will be an opportunity for people to cash out from different type of companies, and it'll be interesting to see who the players are. So that will really lead to that. And the point that I was making about MAGNiTT will be looking to track all secondary investments on the platform in 2024 to complement the M&A activity that we already tracked, as well as the investment data. And number 5, I think this will be the year of serial entrepreneurs. As companies come up to exit and or fail, there will be founders in the ecosystem that are looking to set up again. With the investment activity still being robust and strong at early stage, I think that we'll see, specifically in the UAE, the rise of serial entrepreneurs raising funds to set up new institutions or new companies for the region in the next 12 months. And that's something to keep an eye on. We've already seen the likes of Idris, previously CEO of Fetcher, coming and setting up companies. We've seen many companies that have been acquired, setting up new entities, Munchon as a point in case. So it'll be interesting to see how that evolves in the months to come. Before I come to answer any questions, and I'll do that now after I take a sip of water, just a couple of things to highlight for anyone that's interested to learn more about MAGNiTT. As I mentioned, these are the geographies that we cover, 32,000 different companies and benchmarking of 16,000 transactions. A couple of things that people may be not aware of: a startup comparison tool that was a request of many clients, where you can benchmark the profiles of companies on MAGNiTT to be able to compare them and export that data. You can now filter directories and export the data from that into both PowerPoint and PDF, which you can ask a member of our sales team, and please email sales@MAGNiTT to get a demo. Southeast Asia for all benchmarking in the directories, as well as the advanced analytics tools, and the founder background data, which will be incorporated into the people directory for you to be able to do analysis, not only on investments and startups, but on founder information in the ecosystem. And we will be launching 2 reports in the coming months that both focus on private equity and founders that I'll be sharing in due course, as private equity data is one of the biggest things that we would like to capture. As MAGNiTT moves in terms of geography, we also want to move in terms of data set, and also complement the venture capital data in terms of private equity data. And as I mentioned, some of the tools that I've already highlighted, and if you're interested in getting a subscription, include advanced analytics, APIs that you can integrate into the different tools. And for anyone that's interested in downloading the report, as I go into the Q&As, I leave this QR code, which will direct you to the link, and ask the team to share. So as I take a quick sip of water, I'll be happy to answer any questions that you have as part of the presentation. Great. Well, lots of questions. Ahmed asks, what are the untapped markets in the MENA region? Again, difficult to say what untapped is, and difficult to kind of highlight what we think is a potential market. One of the things that I repeated last year many times that I think is going to be coming to fruition is the opportunity of an untapped corridor between Southeast Asia and the MENA region. Right now, given the challenges at MENA level, the 2 leading standout geographies in terms of venture capital and economic prosperity seem to be the UAE and Saudi Arabia. And more companies are setting up in the UAE and operating in Saudi Arabia, and becoming what was historically MENA players, but 2 dominant geographies to focus on. You then look at which other geographies make sense to scale into. When you look at Southeast Asia, operating out of Singapore and potentially scaling into Indonesia and cross-pollinating across these 2 geographies and building a corridor for that is the untapped opportunity, I believe, is currently most worth prospering. And as we bring more data around Southeast Asia, there are the likes of Enterprise Singapore, EDB, Temasek, many of the leading VCs in Southeast Asia. Golden Gates, I gave an example earlier in the presentation, as one of the entities and leading venture capital companies in the region that has set up in Saudi Arabia. The cross-pollination across those geographies is something that I think is going to be worth looking into. What are the promising tech sectors that you believe will attract most investment in the MENA region? I mean, unfortunately, well, not fortunately, but fintech seems to be the industry of choice. Where appetite grows for others, maybe sustainability, given the efforts that were taking place in COP28. If we look at healthcare and education, I think that's the next wave of innovation. People talk about AI. AI, in my opinion, is not an industry. It is a feature. It is a vertical that transcends and crosses industries. It's an enabler of many companies, but it's not a sector in itself. So it'll really come down to what is the investor appetite. But I do think that many founders, or at least VCs and founders who are on this call, I've had this conversation many times over the last 2 years. The unicorn obsession is one that I find a little bit challenging, but building companies for acquisition is key. So the question becomes, what is the most attractive proposition for a potential acquirer? And when you look at who the historical acquirers are, they are either international players looking to get market access, for which you've done the basically dirty work to build out for the proposition, and or corporates that are looking to diversify their solutions. And as such, when you're looking at what are the tech sectors that are likely to disrupt that, who are the leading players globally that are looking to come to the region? Who are the corporates that are looking to diversify their propositions? And what are the companies that can do the work on behalf of those two entities and scale as aggressively as possible to become attractive for an M&A opportunity? Do you have bifurcation of equity versus debt? Yes, absolutely. All of the report that I've just highlighted, Alia, is equity. We do not include venture debt as part of this proposition, but if you go onto the MAGNiTT platform, using any of the tools, you can filter all investments by equity and debt. And as I mentioned, moving forwards in H2 of 2024, you'll also be able to separate that by private equity as well. So for now, you will be able to access the two of them, specifically by filtering on the platform. We will be bringing out, unfortunately, we're not doing our sponsored report this year for venture debt, but we will be bringing out a client report on venture debt in the ecosystem. Did you investigate the integration of migration between different emerging venture? Yes. So this is a great question, Mohammed. We are looking at one of the charts that I really like that I've seen elsewhere is the cross-pollination of investment activity across different markets. And one of the things that we're trying to build out as a tool and as an infographic is the cross-pollination. Who are the most active investors that cross-invest or co-invest together, and the abilities and synergies that exist. In the case of Southeast Asia, we wrote several articles, which maybe a member of the team can share, talking about the trailblazers, those startups in the MENA region that are operating in Southeast Asia, and those investors in Southeast Asia that are operating here. And when I mentioned Southeast Asia, obviously we've now expanded into Singapore, Indonesia, and the likes, but there is also Japan and South Korea that are very interested, Sharuk being a great example of a VC fund that supports the interest that's coming from South Korea into the ecosystem. It'll be interesting to mark the trends that we see from that proposition. Could Egypt's VC market survive the macroeconomic challenges? Look, Mohammed, that is a great question. I don't have a specific answer to that question. I think that there is an arbitrage play to be made. Being able to operate your back offices in Egypt, but being able to build your revenue outside of Egypt is a proposition that makes it extremely attractive if you can make that work. I think that there's a huge amount of talent in Egypt, specifically in the tech space. The question becomes, have they got the runway, the opportunity, and the market size for it to be attractive for venture capital investment? Or are they going to have to operate in other GCC geographies to be able to make that work? And that's a great question that I'm not necessarily qualified to answer. But it has definitely been, if you do strip out Halland's investment in Egypt, it really does bring into question, compared to many other geographies in the region, how they've compared in terms of venture capital. Ahmed asks, what are the current gaps in the Saudi VC market? I think that's a question to McKinsey and not me. Great question. I think that there are always gaps in any market. I think that rather than look at it as a gap, and I'm not sure whether the gap is in terms of investment or challenges in terms of the market, I think the rate of growth in Saudi Arabia has been extremely impressive. The work that the government's doing in terms of stimulating the economy, I was there in December, and many initiatives that are being driven. But at its core, it's not Saudi specific. It can be the UAE, it can be all of the different entities. One of the things that's important to highlight is that talent is a big driver. So being able to continue to foster immigration in Saudi, to bring in talent as well as train talent locally is important. Second is market access. A lot of companies are Saudi only or Saudi focused. How can they scale into other geographies to continue their rate of growth? Um, Scalability, as I mentioned, is extremely important within a geography and identifying a product market fit for that proposition. And then capital. We had Luca Barbi, who's the general partner and CEO of STV, that joined us in a webinar, and he was talking about the lack of capital. While I already highlighted that Saudi's growth was largely driven in part 77% coming from mega deals. If they want to see continued growth of many of these startups in the unicorn program, that they require almost, I think they mentioned 240 million per startup to get to unicorn status, and currently only a small fraction of that is currently being deployed into the ecosystem. So capital remains an opportunity for growth in the Saudi ecosystem. Why do you think value is still high for early stage in MENA, although funding has been declining? Look, ultimately, valuation is a driver. It's a double-sided marketplace. Startups that are potentially setting up now are serial entrepreneurs that have the experience. I mentioned that with regards to exits or potential failures that have been taking place and setting up. The second is the more that historically investors who invested at later stage shift to early stage. That was the chart that I was highlighting, that more and more entities are making capital deployment at early stage in terms of $0 to $1 million tickets or $1 to $5 million tickets. The amount of capital that's being available to those investors continues to grow. So while there hasn't been dry powder available for late stage investment, that has gone into early stage investment, and people are basically raising bigger rounds. So where historically you may have done a certain amount of round for 12 months of runway to get yourselves to the next investment round, many of them are now doing 18 to 24 months of runway, and in part that's impacting the valuation. But I do think that if investors are being risk averse and a risk off mindset for late stage investment, early stage investment opportunities provides them the opportunity to get a 7 to 8 year runway. Many people say the best vintage of investment is during an economic crisis. Now is the economic crisis. Make that investment, weather the storm, come out in the next 7 to 8 years and exit. That would make for very strong valuations from that perspective. Could you please give more colors about the activity of fund of funds in the region? I mean, look, the GCC specifically has a lot of fund of funds that are focused, that are sovereign entities or funded by sovereign entities to stimulate the economy. In some ways, that has taken place already. Al Waha Fund of Fund in Bahrain, I think it was one of the first to get set up here in the region. You have DFDF that's based out of Dubai as Dubai Future District Fund. You have both Jeddah Fund of Funds and SVC in Saudi Arabia, as well as Sanabo that does investments in funds. Their role is effectively to fund the funders, and they are the biggest LPs. One piece that we want to track is what's the impact of sovereign fund of funds on the wider economy. There was a great piece done by Eden Rabi, who does his own data reports, talking about the impact and the influence of sovereign entities in the wider ecosystem, and effectively they're catalyzers until the private market comes in and does it on their own. But here in the region, if you listen to podcasts that come from the US and Europe, they talk about whether there are enough LPs to support the market. And who are the LPs in the US? Endowment funds, universities, large corporates, family offices, individuals that are extremely wealthy. Here in the region, they have not historically been the most active LPs, and therefore sovereign entities have filled the gap in the same way as Temasek and GIC did in Southeast Asia. You have those that are kind of playing that role here in the region. Chem, great question on the UAE. We have a whole report on that dedicated to the UAE. If you're a client of MAGNiTT, you'll be able to access a breakdown of the deals in the UAE by geography, by countries, and by segment. Do you think that the main reason for KSA leading MENA investments are due to the exclusivity because of Tabi and Tamara? Look, I made the data point. 77% of the total amount of capital funded in Saudi Arabia was by mega deals. Those 4 deals included Tabi, Tamara, Flower, and MAGNiTT. I think that that's a very big influence, but that is on the own credit of the startups that are raising those funds. You have both the capital that is able to be deployed into those startups, as well as the startups that can raise those amount of rounds. So in Tabby's case, they changed their headquarter. They had an earlier round in the year for about $45 million that was attributed to the UAE. Later, the investment round, which they did only in December of last year, was after they moved their headquarters to Saudi Arabia. So yes, it's a big driver, but it's not the only reason. And it's credit to the ability to be able to deploy those capital and have the startups that are acquiring that. I just see that there's questions that are being put in the chat, so I'm going to quickly jump there. Iraq, great efforts, not too much about Iraq. I mean, look, absolutely. I think Iraq is a huge opportunity. As people know, I'm Iraqi myself. But I think from venture capital, it's very challenging from the view that investor appetite for the kingdom Iraq, sorry, is one which is a challenge for due diligence. You need to have operating companies. There's a question about legality, structuring. So huge market opportunity. There are founders that are doing it. We do capture the data and work with entities in Iraq to capture that information and data, but relative to the rest of the region, it is still relatively nascent in terms of venture capital deployment. Murtaza, thanks for the question. How are the MENA nations making themselves attractive in the face of Saudi and government efforts to make themselves a new hub? Will more large startups migrate to Kingdom? Great question, Murtaza. Look, I mean, I can't speak on behalf of the different entities. I think that number one, we're in a challenging macroeconomic environment, which is why I started the presentation with that. Different geographies have different initiatives to drive for their macroeconomic focuses going into 2024. Those that still have interest in technology and venture capital will potentially come up with policies to support them. Different geographies are having to reposition themselves in the face of what has been happening in Saudi Arabia, either to attract international entities to come and set up and be a launch pad, specifically focus on sectors or segments, or come up with new initiatives to try and support entrepreneurship. But I do think that it's an interesting time. Competition is healthy. Competition can drive improvements. One of the biggest challenges is market access, which has always been the case here in the region. Now is the time to try and see how people are able to collaborate and operate cross geographies more fluidly. And to your question, do we think that more companies will start to migrate? I think that many companies that are potentially in the Levant or Egypt or other African countries that are looking to raise rounds may look to benefit from the ability to relocate their headquarters, as well as those that are looking that get a majority of their revenue and the benefits from moving their headquarters to the kingdom are likely to see shifting of headquarters from one to the other. But in the end, I think that companies need to be operating pan-MENA. Many will be having operations in multiple geographies, and I don't think that it's as important where the headquarter is. Look, I'm very conscious of time. Thank you very much all for joining me. There's 1 minute left. Please do reach out with any feedback that you have on the end of your report. I hope the team has been sharing some interesting links with you. Please do share the feedback. I will be sending a wrap-up email after the webinar. Look forward to hearing from you soon. If you're interested in learning more and getting access to MAGNiTT, please do reach out, sales@magnitt.com, and we'll be more than happy to connect with you. And do sign up to our newsletter to stay up to date with all the latest information, and follow us on LinkedIn for all the latest charts and data. Thank you, and look forward to catching up with you soon at an upcoming event.